Today we're going to be talking about SoFi's upcoming Q4 earnings. And we will not only look at analyst expectations for this quarter, but also look at Q3 and certain factors that I will be paying attention to in Q4 that I think are going to be important for SoFi into the future. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Over the last 6 months, SoFi is down almost 21%. And more recently, in just the last month, the stock is down almost 30%. We saw the Fed come out and announced their plan around interest rates, and this caused a lot of investors to become interested in SoFi's stock, and it ran up from around $6.50 all the way up 55% to $10.30. However, again, in the last month, it has fallen down to around $7.50. And SoFi is a stock that always seems to run up after hours. We're expecting their Q4 earnings announcement on January 29th, and analysts have an EPS estimate of around 8 cents. This is likely a non-GAAP EPS estimate, and then we have a revenue estimate of $571.5 million. And the company has even came out and said over the last couple of quarters that they are expecting Q4 to be their first net positive income quarter. And that alone should drum up a lot of excitement around SoFi's stock, but there are other key metrics to pay attention to. The first one is member growth. In the most recent quarter announcement in Q3 of 2023, they announced 47% growth year over year. I would like to see this trend continue and stay around that 45 to 50% year over year growth in members. Ultimately, SoFi right now is still in the growth stage, so bringing in new members is very important. And right now, SoFi is known for a couple of things that really excites members and brings new people into their ecosystem. The first is their high interest rates for savings accounts, but also they have introduced a 2% IRA match. And this is a great way for SoFi to attract new members. They can get people into their ecosystem, opening up savings accounts, checkings accounts, as well as investment accounts, and offer them a 2% match on contributions to their IRA. And what this ultimately does is getting people in, using all the different products within SoFi, and ultimately get them to be lifelong users of the bank. The second metric that I'm paying close attention to in this Q4 earnings report is going to be revenue growth. What we saw in Q3 was 27% year over year revenue growth. I would love to see in Q4 them hold this number or get anywhere from 27 to 30% year over year revenue growth. In 2024, I'd like to see that number hold around 25%. I don't want to see it fall into the low kind of 20s or even into the high teens. I think that would be a little bit concerning because again, SoFi is still in that growth stage and their top line numbers need to continue to grow. And for their full year 2023 results, they're expecting their revenue to grow anywhere from 33 to 34%. And analysts on Yahoo Finance match that expectation. They're expecting around 33.4% revenue growth year over year, coming out to around $2.05 billion of revenue in 2023. However, it's a little bit concerning because in 2024, they are only expecting revenue to grow by 22.3% up to $2.51 billion. And personally, I think these estimates by analysts are a little bit on the low side because we have a few different factors that are going to play into SoFi's business model and really should help prop up their revenue and member growth numbers. The first being the fact that repayments on student loans started as of September 1st, 2023. And that means that Q4 is really going to be the first quarter that those student loan payments are going to be reflected in SoFi's earnings. The second big factor for SoFi in 2024 is interest rates, and the Fed is anticipating that interest rates will drop around 75 basis points in 2024. And this is huge for SoFi's business because of the products that they offer, whether it's student loans, mortgages, personal loans, car loans, whatever it may be. SoFi offers those, and they will see a lot of influx of customers using those products. And ultimately what that does is gets them interested in other products as well within SoFi, like checkings accounts and savings accounts. And really, when you start seeing these bigger drops in interest rates, that allows a lot of people to refinance some of their debt at lower rates. And this is perfect for SoFi to capitalize on. And in my opinion, actually 2025 will be a bigger year for SoFi because we're anticipating a drop of 100 basis points throughout the course of that year. I think on the back half of 2024, you could start seeing some people considering refinancing. However, the benchmark is generally that you need to see interest rates drop 1% before it really makes sense for you to refinance your house. And I think we won't really start seeing any people refinance until the back half of 2024 or even the middle to start of 2025. And ultimately, investors want to invest in a company that is profitable. In 2023, they're expected expected to have a negative 38 cents EPS. However, by the end of 2024, analysts are expecting the company to reach profitability of around 5 cents per share. We have a low estimate of negative 5 cents and a high estimate of positive 16 cents. And I wouldn't be surprised if by 2025, we start seeing some very interesting numbers out of SoFi. I think they could start hitting EPS numbers of anywhere from 25 to maybe even 35 cents per share. But I do think that these earnings are very important for SoFi. They've talked about reaching profitability over the last 6 months in this quarter. And what that means is they need to deliver on those numbers. If they miss profitability, I think the stock will fall in a major way. However, if they're able to hit profitability and maybe even show 2 to 3 cents of positive EPS numbers, I think that could send the stock up in a huge way. But keep in mind to never buy a company just because some random guy on YouTube talked about it. I do own shares of SoFi, so I do have a bias for the company. I think that it is going to be successful over the next couple of years, and do not buy a company just because I talked about it. Do not buy a company just because anyone else talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day.